All right, hello, hello. Haha, we are working. We are working. Hopefully we are working anyway. Hopefully everybody joins me back. Perfect. Perfect. Thank you, Ratish. I have no idea what happened there. I literally just did the classic clear the cache, deleted some memory from the back end of StreamYard, and all of a sudden it works now. It's really weird because it was showing me that the microphone was working, but no audio was coming through. But fingers crossed it stays now then, because I would have no idea if it was to go off again. So thank you for coming back. Thank you for sticking with me. Apologies for that. Let's get into it then. So as I was saying when you couldn't hear me, was the fact that I might sound a little bit full of cold. My whole family has a cold. It has now come to me. It's my turn to pass the baton on. So if I do sound a little bit bummed up, I apologise. And I have my nice warm cup of coffee next to me, so I will be sipping on that. But at some points I might just have to blow my nose or whatever. But I'm sure we'll be all right. Yeah, let's get into it. I'm going to go through the currency strength and weakness for today. We're going to go over the data coming up. We have 4 interest rate decisions coming up this week, which is very interesting to us, as we like to look at what's going on in terms of the fundamentals within the market. So I like to look at what's going on this week. We've already had 1 interest rate decision already. And hello to everybody that's come in: Vincent, Ratish, Eddie, thank you for coming back. We've had 1 interest rate decision already. That was the RBA, and the RBA have held interest rates at 4.35%, which was largely expected. Now, I actually feel there is a case for them to start cutting interest rates. I was doing some research on the Australian dollar and the Australian dollar economy in particular, and I've got a feeling that pretty soon we're going to see them cut rates. Now, they have said that they're not really interested in cutting rates until Feb of next year. Okay, so we might not see any kind of movement until Feb, but there's some interesting data that I'll go through another time on Australia that I feel that makes me think that they should cut rates sooner rather than later. But we do have that. We have OPEC meetings all day, which is going to affect oil prices. Oil price started to sort of rebound slightly from the lows. But tomorrow we've got some really interesting data. We've got China new loans. We've also got CPI data in the US, core CPI. Forecast to remain the same at 0.3%. But more importantly, at the sort of middle of the US trading session, we've got the Bank of Canada rate statement. They're expected to cut interest rates by 50 basis points, so 0.5% down to 3.25%. And that is highly likely. Bank of Canada are trying to stimulate growth over there. They've got a significant problem, especially now that Trump is coming out saying that he's going to add 25% tariffs. It's going to be difficult for them to try and stimulate that growth if they are impacted by those tariffs. So they are going to continue to cut rates for now. And then we have the BOC press conference after. And then on Thursday, we've got 2 central bank releases. We have the Swiss National Bank, which we'll cover in Thursday's live stream, but they're expected to cut interest rates by 25 basis points. And we've got the big one, the ECB, expected to cut interest rates here as well. So big changes coming up in terms of interest rates in markets. They are continuing to move. We've talked a lot about the potential on the euro. Good afternoon, Vincent. Hope you're doing well. So yeah, I'm still looking for potential opportunities to be a buyer of the euro. at the moment, but we're coming into some key areas of support which I am interested in at the moment. So we'll go take a look at euro. It's not when you're trading these type of markets that I'm going to be talking about this today, we're looking heavily more on sort of a reversal side of things, and let me just kind of show you why that is. So let's just have a look at what's going on in the currency strength meter point of view first, and then we'll build up from there. And these are the currencies that I am watching for the week ahead. Good afternoon to you, Jacob. Welcome to the live stream. We can see here that the euro was actually one of the better performing markets last week. It's gone from -6 up to 0. Let me actually just zoom in a little bit more so you can see this. So you can see it's gone from -6 up to 0. So that is a change of +6. Okay, so this is one reason why I'm looking at the euro, and the euro is stronger than most currencies right now. Okay, the only one it's not stronger than at the moment is the pound. Okay, when you look at it from technicals and breaking highs and lows, and I'll go take a look at that in a second in terms of showing you how I create this. But euro at the moment is on that upward trajectory, coming in from a reversal zone, which is something we spotted last week, and is now outperforming most markets. The three markets that it's really outperformed last week was the Australian dollar, the New Zealand dollar, and the Canadian dollar. All those markets are rallying, and those are markets that I am very interested in going into this trading week, especially euro against the Canadian dollar. Okay, now CAD is the weakest currency at the moment, sitting in a reversal zone. The commitment to trade a bullish signal that we had for CAD futures has faded a little bit, so I need to update this section really, because I haven't updated that on terms of cost signals. But that to me is the CAD bullish signal there has started to fade a little bit, so I might cut that one out, and we might have to wait a little bit longer until we get a very strong signal. But we do have a euro bullish commitment to trader signal at the moment, and we also have a New Zealand dollar bullish commitment to trader signal right now. And what I've looked at here is the euro is starting to come in line with this. Okay, so this is why I'm very interested in the euro at the moment, because we've got it climbing in strength. Okay, we have a commitment to trader signal, which is a bullish one. Okay, so that is again looking for potential bullish moves on a euro pair. And then we also have a seasonal play, okay, which I'll take you through very, very shortly. But a seasonal play as well to the upside. Okay, how do I know that we've got those? Well, if we head over to, let me just sign into our commitment to trader data. And I'll sign into our seasonal data as well. So if we have a little look first at the seasonal, okay, we can see that typically in December we rise. Okay, usually the euro forms a low around November 22nd and starts to rise. So I'm looking for that potential there on a euro seasonal bullish play. This is a euro futures chart, so this is essentially equivalent to your euro US dollar. Okay. 2 seconds, guys. Just need to blow my nose here. Right, so seasonal play to the upside there for euro. If we go take a look at the commitment of trader reports as well, when we take a look at this, we can actually see that there is a now 100% buy-in from the commercials. Okay, again, let me just kind of zoom into this a little bit so you can kind of see this. Okay, so you can see there's 100% across the board there on euro. So what does that mean? So when we open up this chart here, you'll see three charts. You'll see the weekly chart up here. Okay, so this is a candlestick chart, which you're probably super familiar with. You then have a commercial index chart. Okay, and all this is telling us is when it's at 100, it means that commercials are buying at levels we haven't seen for 36 months. That's what it's telling us there. Okay, when we have a little look at what's going on here, and we just look at the net, right, we can see that contracts now on a net scale are up at 34,476 to the long side for the commercials. Okay, when we go take a look at what's going on here on the hedge funds, okay, they are shorting at levels minus 57,489 contracts. Okay, in history, what history tells us is that when that happens, there is a good chance that the market might reverse. Doesn't mean that it's going to reverse. There are plenty of times where this doesn't work out. Okay, but when you try and pair that in with commitment to trade reports, seasonal reports, currency strength and weakness now starting to show signs that the euro is gaining against other currencies, there's a really good chance that this could start to flow through. So the last time we kind of had a very similar signal to this was back here, okay, which was the 29th of August 2022. Now, if you actually look at how price performs, we actually saw price continue to fall for another 3 weeks before consolidating pretty much for 2 weeks before seeing a move higher. So in total, when we had that signal previously, it took 5 weeks before we started to see any kind of moves back to the upside. So this is what I'm looking for here, something very similar. We have breached an area of support, which is that kind of range low in the market. What I was looking for really was for price to close back within the range and maybe try and compete to see markets move back within that trading range. So if we just go take a quick look at what euro US dollar prices are doing right now, we can see that the market started to form this kind of head and shoulders pattern. We just couldn't clear the neckline. Okay, we couldn't clear the neckline. Technically, that is a new high because it's got a higher high on it, but we just haven't been able to kind of clear and make a complete close above that level. So when you're trying to trade a reversal like this, it can be very difficult to do so. The way I like to look at the reversals in that sense is I will always look at sort of lower prices because it just gives me the opportunity to get a better entry. Okay, so one thing that I was looking at, we just go to the hourly chart here, was that the market has found some buying. Okay, we can see down in here it found some buying, down in here it's found some buying as well, where you can see we've had some decent kind of pushes. Also, this area down in here was something I was interested in as well because we had a lot of buying coming from this area as well. Now, price is currently sitting at this minor area of support. I mean, as well, you could argue that if we were to put a volume profile on here and we were just kind of looking at the move that we had to the upside, a lot of volume is down in this area, right? The reason being is because usually when you get a consolidation on the chart, it's where most transactions are taking place. Okay, right? Once it breaks out of that area, it goes to find value elsewhere. So the market is coming back down into this consolidation. I feel if we break out, we could start to begin to kind of make a new move back to the upside. So I like the idea of being a buyer of euro. We just might not necessarily be able to buy it against the US dollar just yet. You know, arguably as well, I'd like to see some kind of complete change in trend here for the daily chart. You know, if I look when we had the US dollar signal last time, so the dollar index had a bullish commitment to trader signal towards the end of September, and you can see that, you know, the market rallied into those previous swing highs, rejected, broke through to the downside. But really speaking, that move really kicked on once it had broken through and traded through the swing low here, you know. So I want to see price kind of break these highs, close above it. That would be a real sign that the sentiment on euro US dollar was about to shift, and that we could expect a little bit more upside from this market. But if you are going to try and buy this, I'd be looking to buy it at lower levels. That's just my opinion. No, you know, that's not advice or anything. That's just how I would see this. I would be looking at you know, towards the 1.05s maybe, for a little move back to the upside. What's your take on Aussie yen short at the moment? Let's have a look. Let's have a look at the strength and weakness. Aussie -4, losing strength. Japanese yen at +7. Now remember, when the market is at +7, that means that it is very strong / reversal. Okay, so very strong / reversal. One thing I've noticed about the Japanese yen at the moment is we have had a bit of an aggressive move. One thing that caught my eye as well on the COT report side of things, if we just go over to the commitment of traders page, this has appeared. Okay, so what this does, it kind of calculates how the commercials are doing and non-commercials doing, and the sort of change that's going on. So we can see that commercials biases it shifted to kind of extreme short, while as non-commercials have are extreme long Japanese yen at the moment. So in that case, I would arguably be looking to short the Japanese yen with that extreme, and that kind of makes sense because we're at this reversal point. Now, do I think Aussie yen is going to be the one that turns? Probably not, because the Australian dollar is a weaker currency right now. But when I look at the Aussie yen price, look what's been happening. We've had this nice break to the downside. We tried to come in towards this area, which is where I would have wanted to see price before it kind of rebound. Friday's close was quite bearish. Monday's close was very bullish, and that's really because there's been some talks of China adding some stimulus in the market, and Australia has gained a little bit of strength. Now, does that make me want to be a buyer of this market? Well, no, because from a technical side of things, what's going on? Well, first of all, we're below the 50-day moving average. I don't really want to be a buyer when price is below that level. It's, you know, I'd prefer to see price kind of break above it and then continue to push higher. Other than that, you know, we could expect to move up into this resistance zone towards that 98 handle. What it does here then is going to be, I think, the crucial point for me. Do we start to see the yen strength come back into the market and it try and push these key swing lows, or does it break above this area and hold as support? That's this zone, I feel, for me, Vincent, is going to be the one that I'm taking a look at. I feel if we can hold that zone, we could see a little bit of a lower push. Now, I was looking at the hourly chart earlier. I can see that we have changed trend. We have created the lower low, prices moving back to the upside. So arguably, if you wanted to be short this market, this is the type of sentiment you want to see. You want to see the market making lower lows and lower highs. You could look for a 15-minute break of this trend and try and look to, you know, trade down towards this low here or this key sort of swing low down at this point. I'm just a little bit cautious. I want to try and see price hit the 98s first, then create that reversal setup for me, because I do feel like the Aussie is going to be under a little bit of pressure, and I want to be, you know, I do want to sell the Australian dollar, and I want to sell it against currencies that are strong. Japanese yen is one of those currencies, but it is in the reversal zone, so we've just got to be a little bit more cautious with our entries on this one. Now, looking at this, if I kind of like wasn't being too picky about my zones, and I was looking at sort of areas of support, and I was taking in the wicks into consideration, then I would say that it's already kind of hit that level. So, you know, this is one's completely up to you. I like the idea of being a seller of this market. I really do. I'm just being a little bit more greedy, I guess. And again, it comes down to risk reward for me. If I'm going to get into this market, let's say I'm at market, where is the safest stop loss for me? And the safest stop loss for me is above these highs, okay? Because that to me is where I'm wrong, right? That to me is where I'm really wrong on this. I think if price rallies, closes above this level, I feel like this move to the downside is probably over at that point. So that's where I'm wrong. That's where I'm willing to be wrong. So do I want to be trying to trade at lower time frames where my stop loss is in the way of that resistance? No, I want to be making sure that my stop is above those highs there, you know, if not ATR above, which is at the moment 130 pips. So you're looking at sort of 98, you're looking at least into sort of your 100s where a safe stop is. So I need to be looking to be trading around that zone really in order to make it worthwhile for me, in order to take any kind of trade. You know, I can try and push for the lows of the zone. I don't particularly like to do that. I like to be at sort of the start of the zone. So anywhere, if I could get a better entry in and around this area here, then I'd be more comfortable with taking a position there, okay? But, you know, if we look at sort of what's going on, currency strength and weakness is still technically to the downside here. We had a consolidation, market broke down, we're trading below the 50-day moving average. You know, I've got this on the currency strength meter as well, over here, as a market to trade, right? You got Aussie yen, bearish, weekly close was bearish, below the 50 MA. On Friday, it was a close away from the moving average, so that's momentum away, that's positive. The daily trend at that point was bearish, and we're in a phase one. So, you know, that to me is, yes, let's go and take a look at that market. But you still have to put your technicals in, you still have to put your timing into place. Now, if you want to be a little bit more aggressive, absolutely nothing wrong with that, right? Because arguably price might not get to my zone, because look at that zone there. Price came into that zone. You know, I'm willing to say that that was probably a nice spot for a bit of volume profile in there. Yeah, look at the high volume zone between 97.60s up towards 97.80s. So yeah, you know, look at that, market came in, started to break down. So it's just completely up to you how you want your risk to be used at that point. Sorry guys, I just don't want to sneeze. Did I join? I haven't joined Jason Shapiro's Crowded Market Report. I used to watch Jason's videos. I haven't watched them in a while. I should go check them out though. Definitely good points to look at. I didn't learn any of my sort of trading techniques from Jason Shapiro. I actually found out about COT reports through Markets Made Clear, Ray Gilmore first. Ray also showed me how to build my own currency strength meter. So that's why I know a lot about the COT reports. I found out about Jason Shapiro a couple of years ago. But yeah, I'm sure his videos would be fantastic to watch. I haven't seen any in a minute, so I'll definitely check some out though. Afternoon, right guy. Hope you're doing well. Eddie, thoughts on the Swiss COT looking bullish? Swiss. Let's have a look then. Looking bullish on the Swiss franc. Potentially getting there. Getting there. Yeah, getting there. I mean, we're not at extremes where I'd be like, yeah, this is going to be a big reversal and we're going to start looking for that bullish move. Strength and weakness is definitely showing that there's some bullishness within the Swiss franc. We see it went from -1 to +2 this week, from last week, sorry. So that's a gain of 3 places. So we're definitely seeing a little bit of a move higher for the Swiss franc. When we look at the commitment of trader changes, you know, and we look at what the hedge fund sentiment is at the moment, hedge funds are still short at the minute when it comes to the Swiss franc. So although I can see that there is some strength building. If we actually go and check it out against the US dollar at the moment, you know, if we look at the daily chart here, it's kind of wicked into this support zone and is finding a little bit of buying at the moment. It's finding that kind of support in this area above the 50-day moving average as well. So I think if I wanted to be bullish Swiss franc, I'd want to see dollar Swiss below the 50-day moving average here, and I'd want to be looking for that continuation to drive to the downside at that point. But you can definitely go look at it maybe against some weaker currencies, you know, Aussie Swiss maybe. I haven't looked at that myself, but yeah, Aussie Swiss is pushing to the downside at the moment. You know, that could be a good market to look at. You could see price pushing up. We are very close to these lows right now, which is probably not ideal. But I can see this consolidation there. Maybe a breakout of that consolidation, retest, and a bit of a move down could be something to keep an eye on. Obviously, there was this support as well down here previously that you'd have to be aware of, but that could be, I guess, you know, target one for price if it was to break lower. What other markets were weak? CAD, wasn't it? So you could look at maybe CAD Swiss to the downside as well. You know, I can see, look at that little 15-minute pattern here. It looks pretty nice, doesn't it? You got that kind of breakout of that consolidation. So that could be a move down into this bit of an area here. Let's have a look at the daily chart. Okay, so this is probably why I haven't featured it, because usually I'll go and have a look at the conditions surrounding the market, and we are at these daily swing lows, this daily support zone. That's probably why I haven't featured any kind of Swiss franc moves at the moment. Thanks. Thoughts on Euro Oz, Pound Oz? Yeah, I like both of those. If we look at Euro Oz at the moment, it's extending much higher, and I quite like the idea of being a buyer of euro against the Australian dollar. I was just waiting for a significant pullback. I actually had I've got a video coming out tomorrow about the euro, a bit more of an in-depth analysis, and I featured Euro Oz in that, and I did talk about this kind of zone in here. I just didn't expect it to hit so soon. I was looking for 1.62 for the area to be the area that I'll buy from. But you know, this consolidation here where we had that breakout and that move higher proved to be the area where buyers have come back in, and we started to see a push higher. So I think there's two ways we could look at Euro Aussie at the minute. I think we could look at it from, yes, it's kind of doing what I thought it would do this week, but you know, I wanted to be a buyer on this daily demand zone. My other alternative to this is for price to break out of these highs. I think if it breaks out these highs, it could open up a move up towards sort of the 168s. But do I want to be buying there? Again, trying to think of risk and reward ratio. Where's my safe stop? Sort of below those lows there would be a safe stop for me. So if price came back down to there, you know, I can increase my risk reward ratio. Did quite like that 4-hour consolidation there, but I haven't took any action on that because I just didn't think that was the area where price would bounce ultimately. And, you know, looking at the chart there, I don't think I would have had a trade, honestly, unless I was on the 15-minute looking at a break of the 15-minute. I don't think I would have necessarily had a trade there personally, so missed out on that one, but I'll keep an eye on it. It's definitely on my radar. Same with EuroCAD as well. EuroCAD closed up in this area here, closed up in this range. I'm actively watching for EuroCAD opportunities. This was my support zone that I marked out a little bit earlier. I'm waiting to see if buyers come back in at this point. We are starting to see that now. So that's quite nice. I haven't actually, my alert went off earlier for this, so we're breaking into multiple highs here now, which is good. What I'll be looking at now is price action. You know, is the 15-minute going to slow down? We're going to get like 3 or 4 sort of very small candlesticks. Is that going to be the catalyst that then sees price push higher? So yeah, EuroCAD for me is one as well. I'm actually going to set an alert on this. Let's see if it can try and pull a little bit low. I want to see if we get kind of like the next half an hour to an hour just of it stalling here on a 15-minute. But I do quite like this setup right now because that was another support zone that I quite liked, because it's also these range lows. So ultimately, you know, do you get like a couple of days of consolidation here before price continues to push higher? You know, that's something I'm really looking at for that. Pound Aussie, sorry, was your other one. Yeah, I like Pound Aussie as well. Very similar feelings to Euro Oz. You know, we had a consolidation down here. I can't buy there. That's you know, there's no risk reward for me at that point. So unfortunately, I've got to wait for those markets to pull back. When you have a COT signal, you trade the bullish one versus a short one. You can do, and they can be very, very good. We had one earlier in the year, and it was pound Swiss, which was, I believe, here. Okay, we had a sell signal on the pound and a buy signal on the Swiss franc, and that's what happened after. I did a video on it. Let me see if I can find it for you. Let me just give me 2 seconds. Because I explained in that video how you can use the two to trade against each other. So that will explain it there for you in a lot more detail. Let me just go. To the channel, videos, search. I'm just going to type in pound Swiss because I'm pretty sure it was the pound Swiss chart. Maybe it wasn't. Let me type in COT. Pretty sure it was pound Swiss. Trading with COT result, time to sell Swiss. When was this? July. Ah, yeah, here we go. Let me grab, share, copy, put this in the chat for you. So you can take a look at that. That's the how to trade using COT reports, and that was pound futures. Do you know what? I can actually just bring it on here, can't I? So we were looking at the time. We were looking at Swiss futures, and Swiss futures had reached an extreme. So commercials were buying at aggressive levels, and then if we move along to pound futures, we could see that hedge funds were buying at extreme levels just in here. You can just kind of see that the pound was buying at aggressive levels, commercials were selling at aggressive levels. So what we decided to look at that point was an opportunity to sell pound Swissy. And this was the pound Swiss chart on the 17th of July. So 17th of July was actually a lot earlier than that. It's there. So that was the 17th of July. Price fell 744 pips after that. But that's the power of the COT reports, right? You can see when you have the two contracts on the opposite side, then it can create a really big extreme. Whether we have that at the moment, because you've got buying from New Zealand, buying from Euro, so really speaking, you want to try and avoid Euro Kiwi, although my currency strength meter is suggesting that we have a little look at Euro Kiwi. I'm not going to be selling New Zealand dollar right now because it's got this potential COT signal for it. You want to be looking at ones that were on the opposite side, but we haven't really got anything that's on the opposite side. So the way I then try and trade that is by identifying weaker currencies anyway, and then try and trade that sentiment. Hi John, can you please have a look at gold in your opinion? Is the market pricing anything on interest, or is it war situation causing the bull run? For gold, it was consolidating. I think it broke the consolidation now. We're starting to see a little bit of a move higher. This is something that we like to see. Well, we kind of discussed how NFP could go, right? We wanted to see on the NFP whether it would have, you know, made a difference to, or what I was looking for at NFP really was a false breakout to the downside and then a move back within the range. We didn't get that. Essentially, we had just a sort of pin close. We've been consolidating essentially for 9-10 days now, and it looks like we're finally getting the breakout here for a little bit of a move higher. Once I think we get this confirmed close above, you know, I'm looking for pullbacks at that point for a continuation. Gold prices, honestly, through December can be pretty bullish. We'll just go to gold from a seasonal perspective. You know, usually around December 13th, we can see a low forming gold prices and see a continuation then up to December 30th. Prices, you know, followed a very close pattern throughout the whole year, especially when you kind of compare it with all years. You can see that we kind of get, you know, the dips where it's meant to dip, the lows where it's meant to find lows. Apart from sort of here, really, that was the only kind of outlier. But you can see how we've kind of closely tracked previous performance on gold prices throughout the year and the 49-year consolidation. So usually around this time we can see a bullish run form from gold. So that's why I'm very interested in being a buyer of gold right now. December typically quite good for metals. So I'm very interested in being a buyer of that market. You know, Markets Made Clear also do a really nice heat map, which is something that I used to show you guys all the time. Let me see if I can go back to the dashboard here. Yeah, down here, seasonal heat map. And you can see when you go down to sort of gold, okay, which is just down in here. If you look at December, gold can be pretty good performing month, as well as November. November and gold usually the best performing months, going into January as well. So this period between November and January can be really bullish for metals, gold included in that as well. So I'm looking to be, you know, a buyer of gold from a seasonal perspective. Whether the wars and whatever situation's going on, you know, I actually feel like gold is quite an interesting asset when it comes to sort of safe havens and whatnot. You know, I did a lot of research on gold because I got burnt on it once, and usually it follows a very similar path to what the equity market is doing. It never used to. Everyone used to say the opposite. Everyone used to say that it doesn't follow what the stock markets are doing. But if I was to compare the stock market with the price of gold, you'll actually see that when we start to see stock market dips within the market, gold also takes a dip as well. When we see a little bit of stock market underperformance, gold will follow that. When you see a rally in the stock market, gold will follow the rally. Again, pullback, we get a pullback, rally, pullback, pullback. You so on and so forth. So we had this recent kind of sell-off, and I think that was just repositioning, honestly, from hedge funds. They'd pushed it so far, it was almost like, how far can they continue to go without trying to, without liquidating some of their position. So I think we've saw that liquidation. Now I think the market could be following the seasonal trend, and I wouldn't be surprised if we were kind of coming back into those all-time highs. When I look at the hedge fund positioning right now on gold, there's nothing here to suggest that they are at extremes. Okay, they were at extremes, which was close to these highs here. So they started to get to extremes around about the 30th of November, 30th of September. But since then, we're not really back at those extremes. Okay, so if I wanted to be like a short seller of gold right now, I'd want to see sort of hedge funds getting back to aggressive levels of being bullish, and I'd want to see commercials being aggressively short. So until that happens, I feel like gold prices can continue to climb in line with that seasonal trend. So I'm going to keep looking at that as well. Karim, do you have something to filter signal, or just have to look for some technical confirmation? Yeah, this is what I use to filter my trades, the currency heat map. I developed this myself for me. It's a tool that I like to use to try and gauge what's going on in the market in terms of momentum, and whether the momentum is in my favor or kind of whether it's not. Essentially, what I tend to do is I would look for sort of how the market has performed on a weekly basis, how it is reflected to the 50 moving average. The momentum is how it's kind of performing in terms of, is it going towards the average or coming away from it? Where's the stochastic oscillator? Is it pointing downward or is it pointing upward, essentially? And what phase is the market in? Now, this is the most important thing for me, right? It's what is that phase of market? Because when I swing trade, I predominantly am a trend-based trader. So I need to find a market. There's an alert going off somewhere. It's EuroCAD. So EuroCAD's pulling back a little bit. So yeah, essentially what I need to try and do is find a market that is in a trend, and then I need to try and find the steps that kind of help that trend continue, right? So one of those things to me is identifying where the stochastic is. So this is a really good example, right? So EuroCAD is bullish because the euro is a strong currency, right? And CAD is a weak currency. What does that create? It creates an upward trend, okay? So I want to try and buy on the upward trend. I want to try and buy essentially when that secondary phase turns into a primary phase. Now, usually around these areas, you will get pattern setups, okay? So I think if you're going to try and trade just patterns on their own, like if you see them everywhere, they're not going to work. But if you are looking for areas, like, or you'll understand that when your market is in a trending environment, at some point that trend is going to turn from a secondary phase back into a primary phase. And what are the characteristics of that? So if I just open this up here, let my coffee go cold. Yeah, if I just open this up here, let's say that's a higher low there, right? On a daily chart. Let's go to an hourly chart. What are the characteristics of price at these areas? Okay. Now, one thing I really like is consolidations. If you get a consolidation and a breakout higher, that's great, because what that means is there's been orders being built into the market here. Buyers have won. Usually when you get price come back and test it, you can see quite a decent push away, which is nice. But essentially you'll get patterns forming. So, arguably there, that's a double bottom pattern. You have one test, two tests, you have a neckline, market breaks the neckline, okay? you could look for other patterns at these points as well. So, you know, there might have been a point where the market made new lows, it came back in, and a higher low. Market then decided to trend back to the upside. But usually, after a period of a pullback in the market, there'll be some kind of turning point. Okay, that's what I look for. I look for that turning point, and if I can get on the back of it, fantastic, right? Sometimes it works, sometimes it doesn't work. That's also fine. But I also like to look at areas where like buyers have come back into the market. Do they come back in again, right? So for instance, this one here, I don't feel like this is the strongest one, but market's rallied. Okay, we came back into the 149, market rallied away from that. So in my head, right, what has happened here? Well, buyers have come in, sellers have left, buyers have come in, market move higher. Really simple. If price comes back to that zone, are the buyers going to defend that position? Are they going to add to that position? What are the characteristics of that area there? Well, let's go lower again. Go to the 15-minute time frame. Have we seen a sort of pattern develop here? You know, market is making lower lows, lower highs. It's broken. It's made new highs. Okay. So this to me is a situation where I'm saying to myself, okay, well, I've got an area of demand. My FX heat map is saying that I should be a buyer of this market, and I've got an area of demand in an upward trend. Is this the turning point now? Potentially. What would I be looking for here? Well, if I get like a bullish sort of setup here now, like a sort of pink candle or something, or some kind of bullish close after rejecting lower prices, then that to me could be a potential setup. The other setup is I like to buy above the 50 moving average. So, you know, if price breaks and closes above the 50 moving average, that could also be an entry for me. And I'd look to see if price could trade back to the upside. Okay. One trade that I took last week that I could show you, because I'm not really in too much at the moment, that reflects kind of the heat map. I'm looking at a lot of reversal setups in the market at the moment. But yeah, looking at sort of pound yen, right? So pound yen last week was, well, not last week, the week prior was on the list to be short. What had happened? Well, the daily chart had broken below the 50 MA there. Pound was a weak currency, yen was a strong currency. I want to try and trade that move. The market is technically in a primary phase there, so that's my secondary phase, that pullback. The extension down is the primary phase. This could be a primary phase. Obviously, I don't know if it's going to continue or not, but we'll see if it did. Well, it did now, because we can see in hindsight. How did I trade this? Well, the first trade was up here. Okay, the market found resistance, it sold off, right? All I looked for was for price to come back into that level there. I actually set this one up with a counter trend line at that point, and when it broke, I got short. So I actually got short here, put my stop loss above the highs, and I targeted somewhere down towards, I think it was 190 spot 50 or something like that. I did a video on it a while ago, but that was the area then targeted. But ultimately, what I'm trying to say is that the market will find, you know, it'll be in a trend, and it's just our job to identify when that trend is going to be changing and whether we can try and get on the back of it or not. Price has since reversed. That's absolutely fine. You know, it can do that. Market is in the, you could argue that we're in the secondary phase, right? Market was in a primary phase, and now it's in the secondary phase. So essentially, could this market still roll over? Well, yeah, it could, because we're technically in a trending market. So where would that be, or where could it potentially be? Areas of resistance. You got this zone up in here, you know, that zone of supply up here. 50 moving average could be that point. But what I'll be looking for is characteristics around that area that show me that the market could be about to continue that move to the downside, right? You know, this was a great example. I didn't get short here, but that would have been my best short, because You have supply area there on a daily chart. If you go take a look at how the hourly chart's set up, at that point when it retested up in here, what did it do? It moved down, consolidated, broke down, and then again consolidated, broke down. So really speaking, I could have got short on the break at the 50 moving average, stop loss above the highs, but hey ho, I did it a different way. Does that make sense? Hopefully that makes sense. I don't know whether I've done a video on how to create a heat map. Don't think I have. I don't think I have done that one. I've definitely done one how to make your own currency strength meter, but I'm not sure the one how to make your own heat map. Thanks for the information. Some difficulties to use cut report trading. Yeah. So remember, so this is my method, and for those that have been in the channel for a while, you know, my method is why. Do you want to be in a market move in the first place? Then the second is the conditions around that market. And the third is strategy. Okay. So your why can be anything from, you know, fundamental analysis. Okay. COT report, right? Currency strength and weakness, seasonal. If you can combine more of these together, then perfect. But I just think it's always better to have a why. So step one is, why do you want to be in the market? I was kind of always taught, well, not always taught, but when I first started, I was very much just conditions and strategy. Okay, so I kind of ignored the why. I was very much just conditions and strategy. So I'd look at markets that were trending, and then I'd apply a strategy to those markets that were trending. The point of those, if you have a why, you have a lot more confidence in what that market could potentially do, and you understand when that market could be coming to an end and why it could be coming to an end. So for instance, you know, if you wanted to trade cut reports, you still have to put in the other bits into it. And what I mean by that is, so COT report at the moment is telling us to buy euro. Okay, now that is a euro futures chart, so really for us that's buying euro US dollars. Okay, that's the one we want to be looking at. But if I go and look at the conditions of that market, is it in a condition or is it in a state to be a buyer? Well, not really, no. You can see that the market is, yes, it's found support here. It has broken through trendline support. But like I was saying earlier, what's going to be that condition that really helps this market, you know, break into new highs? Well, it's going to be having a close above and making a fresh high. If it makes a fresh high and then comes back, the sellers that were involved in here might get out of those positions, and you might start to see a turn for a move back to the upside. Okay, so although everything's kind of pointing with the why at the cut condition, you know, the cut reports, the seasonal reports are telling me to be a buyer of euro against the US dollar, the conditions are not there. Okay, so that's why I also kind of bring in currency strength and weakness, because it's okay, well, if I don't buy it against the US dollar because the conditions aren't there, are there conditions elsewhere that I could try and buy it against? Well, we've already kind of identified in the stream so far one of those markets, which was CAD, right? So the Canadian dollar has been a weaker currency. We can see this reflected by the price chart. You know, the market is making new higher highs. So the difference between Euro-Oz and Euro-CAD and Euro-US dollar is Euro-CAD has made the new high. So all I'm looking for here now is for the market to make a higher low and continue to kind of push back to the upside. All right. So the why is BA, you know, the COT reports. and the currency strength and weakness and seasonal. Sorry, there's an alert going off in the background. Seasonal analysis. What are the conditions around that market? So let's say the Y is buy euros, sell CAD. Right? Are the conditions here to meet that? Well, yeah. Okay, so we've got market making higher highs, higher lows. All I need to see really is for price to form that higher low for me to be a buyer. So now I need to use a strategy to do that. Strategies, arguably you can use any kind of strategy if you're trading a trend. I always feel like, you know, any strategy works, any indicator works when you're trying to trade a trending market, because what matters is the why. You know, why are you in that market? Now, I've pointed out this little area here, but it might not be the area. The market still might fall. Ultimately, when I'm swing trading, I like to trade the hourly, but if we were to see something like this happen and then the market kind of form a higher low or some kind of trading pattern down towards again like a different area of support, maybe down in here, then I'd be looking to be a buyer of this market. Essentially, when I feel this daily chart is going to turn and continue to make a move higher. So yes, conditions are based off technicals. So the Y is the fundamentals, the COT, things like that. And the reason why I use that again, like later in my trading life, I was taught that maybe your Y should be away from the charts. Why you should be involved should be away from the charts. And then you come and look at the conditions of that chart. Do you take a break for the last 2 weeks of December? I find the market really slow. Yeah, pretty much. So, well, kind of the last week, I just kind of take off. I'm not usually trading the last 2 weeks though. But yeah, conditions are largely based off technicals. High gold squad, welcome. Do you trade gold? Yeah, trade gold. We were just talking earlier about a seasonal pattern on gold that we like. And if we go take a look at gold prices at the moment, it's breaking through this sort of 9 to 10 day range. And we looked at the seasonal pattern here, where typically sort of towards the 13th of December to the 30th of December can be quite a positive outlook for gold. So out of 49 years worth of data between those dates, there's a 69% win rate. That's 34 wins, 15 losses out of 49 trades. Average return 1.7%. The max profit from the move has been 17%, and the max loss has been 4.5%. So that's quite a low drawdown considering the max profit has been 17%. The last, did it work in 2016? Ooh, it was down in 2016, which is quite interesting because that was an election year. But yeah, this is a seasonal pattern that I like. You know, it's above 60%. It's got a lot of years and data behind it. So yeah, I would actively be looking to be a buyer of gold now. So let's kind of put this into the conditions, right? So I don't have a Forex heat map for this, but because it's mainly for currencies. But you know, why do I want to be a buyer of gold? Well, we had a little look at the COT reports. Okay, they're not showing any extreme, so there's no extreme going on there. So to me, that is prices can move higher without any kind of worry necessarily of topping out yet. There's a seasonal play, a strong seasonal play that has over 49 years, has a 69% win ratio. To me, that's bloody good. So, you know, I want to be a buyer from a seasonal perspective. What are the conditions around the trade? Okay, so what are the conditions? So first of all, is the market, you know, in an upward trend? Well, arguably yes. You know, if you look at it from a weekly chart, it definitely is. But now the market has created a potential higher low. This could be the primary phase in that move. Would I be more comfortable if price has done that on a trend? Yes. The other condition is it closing above the 50 moving average? Yes. The stochastic is pretty flat. I would like it to have been maybe looking more like this than it is there, but that's okay. It just forms a part of the analysis. And we've broken out of a consolidation, which to me is loads of orders have been going in here. There've been a fair value essentially in price, and now the market is starting to break out of that fair value. So if we can hold above this consolidation zone, I'd be happily looking for potential long opportunities on gold, I feel. Now again, if you want to try and apply a strategy to that, well, what's going on? I need to see a pullback first because the market has rallied. So essentially I need to see, again, that's a nice trading pattern that I like to trade. You get a bit of a base and then the market creates higher lows. What if the market comes back here and then forms a inverse head and shoulders pattern? That could be a potential move. But also I just need to see price pull back. I need to see price pull back. You've got the 50 and the 200 EMAs that are in the right direction now, and then if it breaks out of that pullback phase, I'm going to be a buyer of that market. So yeah, that's what I typically look for when I'm trying to be in the market right now. But yeah, I'm not particularly trading too much at the minute. I'm looking for a lot of reversals when it comes to the dollar pairs. So see any of those reversals form at the moment, but other than that, I'm keeping an eye on sort of Euro CAD. So another market actually was Kiwi CAD. Let's have a quick look at that market, because on my heat map, if we have a little look at Kiwi CAD, I want to be bullish, but we had two that were bearish. Now usually I like to see 4 or more, that's blue. So the one things that were bearish for it was a bearish close last week, and it's below the 50 moving average. So if we go take a look at Kiwi CAD in here, let's go to the daily chart. Yesterday we had that bullish close above that 50 moving average. So usually for me that is a positive, right? The only negative to this now is today it just looks horrific, and we technically haven't made a new high yet, right? So higher high, higher low. Do we have that higher high? Well, at the moment doesn't look like we're going to get it right now, unless something drastically changes here. If we look at the hourly chart, yesterday we had a decent run up on Kiwi, market rallied, but since then it's just completely faltered and come all the way back. Maybe this could be a good area to be a buyer, because it was in a strong area of demand yesterday, but not really too fussed about this right now. This is the new higher high has not been formed yet, so we'll have to just keep away on. But I am actively trying to be a buyer of Kiwi against weaker currencies. It's just that it might not be ready just yet. Looking at this, everything kind of coming together. If I look at other Kiwi pairs, I mean the only one I quite like actually is Aussie Kiwi for being a seller. Sorry, market is breaking down past these resistance zones. I was actually looking at this little zone here on the hourly today. A little bit of consolidation there. So maybe if we start breaching these lows in here, I could start being a buyer of Kiwi. I'm actually going to put an alert there. See if we can get a close below those lows. I hope the comments are coming through, because there was a few comments, but I haven't seen much for a while. Interest rate will drop tomorrow for CAD. Yeah, that's a very good point. Very good point. Interest rates. I mean, have you seen the dollar CAD price as well? Whew. I did not expect 142s, I must admit. When we had that spike up from President Trump tweeting here, I like the opportunity to be a seller of this market. I thought it was a smart idea to fade that move, but we came right back to the open of that zone there, and the market has since continued its way up. That's not something I expected, honestly. Actually, I thought the US dollar would start to falter a little bit now. If we go take a look at what was happening over in the bond market, we started to sort of break above these kind of levels, break above the 50 MA. And, I liked the idea of bonds moving higher, which would be negative US dollars, which still might occur, right? We've broken through key areas of resistance. It's just whether this kind of zone holds and we start to see bonds move higher. I think if we start to see bonds move higher, then there is a good possibility that we are going to see that dollar weakness that usually happens in December form. But right now, that failure to close below that low there, it's just put a bit of a dampener on that US dollar weakness play right now. And now we're starting to pop back up. And I think if we close within these highs there, might see a bit of a pop higher in the US dollar. Can near a bottom? Yeah, I would say so. Like I said, when I actually look at the COT reports on CAD, it's just dropped off a little bit. So what we were seeing before was a very strong signal. We saw hedge funds were selling at kind of levels that were previous, which was, to me, was a potential reversal signal. But they've kind of just dropped off with their positioning right now. If I take a look at the long contracts from the commercials, they are still heavily long, but they're just not at levels like they were previously. Whether that's because of the situation with Trump and they've just basically said no, not interested, or what, I don't really know. But that was just something that was interesting. So not really got the big change there right now. Potentially on sterling though, there's something coming up soon. But the big one for me is euro. Euro for me is the one that I'd be looking out for, as well as Kiwi. That's one I'm kind of very, very much focused in on. But yeah, I'll be interested to see how the market reacts to that data. So besides the seasonals for gold, what might be causing the bull run? Well, there's other things, mainly potential for US dollar weakness. But really speaking, gold has been bullish for a while because lots of other central banks have been buying gold at record levels throughout the year. Whether that's going to continue, potentially. You've got kind of a weird situation with gold. You've got with gold, there's like a 50% to it. You've got 50% which is used for sort of central bank holdings and reserves, and 50% of it's used by producers and whatnot. So I'll be interested to see how prices are impacted in the future of gold. But right now, it's hard to say what the real driver behind that price is. There might be even concerns about future inflation rising again, and it might be used as that sort of hedge against inflation. I know that there's a big concern at the moment that there is that move, but also there could be a potential of a market crash next year. The market is in a real state of parabolic advances right now, and that could be a reason why we're seeing a stockpile of gold also, so that they're prepared for the next time that happens. But there are lots of factors influencing gold prices. That's why I use the COT reports, because I think this is the best gauge for what's happening in that market. But I can't pinpoint a specific thing to say that's the reason why gold is moving higher. There's multitudes of things that are going on within that market. Pound is not good, however, it's the only currency holding up against the US dollar. Yeah, I mean, saying that, the commercials are buying it. at the moment. If we look at the net positioning, they are buying it at levels we haven't seen for a little while. Hedge funds have been selling pounds at levels we haven't seen for a little while. Not at any kind of extreme that I'd be really looking for. I think the last extreme we saw on pound were these extremes that we looked at. Pretty sure when it kind of broke up towards that 1.3 handle, might have been actually that 1.3 there where we looked at shorting. Yeah, in July, that was it. The July pullback. Pound has actually not been performing as it typically does. It's kind of just had a bit of an outlier year, the pound has. So yeah, it'd be interesting to see how the pound continues, or if it can continue to perform pretty well towards the end of the year. So yeah. Right, guys, I'm going to leave it there. Thank you for... I've just realised we've been doing an hour and 10 minutes and I've got some other things to do today. But thank you for everybody that kind of stuck with me after the little audio issues at the start. So thank you for coming and joining me again. I really appreciate it. If you have enjoyed it, if you have learned something new, then please hit that subscribe button, hit that like button. And I'll be back on Thursday, hopefully with no tech issues, to start the day off. That would be fantastic, wouldn't it? So thank you very much. Thanks, Ratish, as well. Thank you, Emma, for joining. Appreciate you all. I'll speak to you soon. Happy trading.